Hi, everyone, and welcome back to the Rawls Group's Advancing Your Business, Your People, and Your Legacy podcast. My name is Kendall Rawls. I'm the Director of Development with the Rawls Group, your host. With the change in president comes changes in estate tax law. This can provide short-term opportunities as well as a lot of speculation looking into the future. As such, there are many questions and what-ifs. To help navigate this unknown environment, we have asked our good friends and experts at Crowe to chime in. Kevin Gilbreath, a tax partner with Crowe, and our very own succession planners, Hugh Roberts and David Weaver, will be discussing over the next 7 episodes advanced tax strategies and the Planning Post-Pandemic and Political Unrest, What's in It for Me series. In this episode, we will drill down into the changing areas of estate tax, what you should know about the Biden administration's estate tax proposals, tax laws looming to sunset in the next few years, and strategies to consider for your own planning. Here we go. Kevin, can you share what is changing in the areas of estate tax?
Yeah, thanks for the question. So we don't know when or how, but we know that estate tax exemptions right now are the highest they've ever been at 11.58 million per person. And so that provides a lot of room to do estate tax planning and gifting. And when you consider a couple that they can use 23 million of lifetime exemption, we know it's really high. And we know that in the Biden administration proposal, they would like to cut that in half. We don't know when, but even if they don't really have to pass a law to cut that in half because the current exemption amounts are set to go back to the pre-tax cut levels after 2025. So right now, there's that's changing. We don't know when, but we know it's going to change one way or the other. Either a couple years, 1 year from now, a couple years, or 5 more years from now. The other thing is just in the Biden administration proposals, a major change that if they were able to pass it into law is that any assets passed down to the next generation and filed on a state tax return would not get a step up in basis. And it doesn't sound like that big of a deal, but it could be a humongous tax burden because historically, when generation to generation you're passing assets down, they've always gotten a basis step up because especially if you're in that level of wealth that you're paying estate tax, if you're already having to pay something like 45%, which is the rate that Biden would like to raise it back to, and then on top of that, you've got to pay capital gains taxes too. The next generation might not be left with all that much wealth. They might be forced into a situation to liquidate the business just to pay the tax bill. So that's kind of there's a lot changing, but there's kind of the highlights of really what's coming and what we should start to think about now and how we can utilize the high levels of exemptions that we have today.
Hugh, what do you have to offer?
Totally agree with what Kevin just said. Essentially what's taken place with the election is we know that the Democrats now control the House and the presidency. What we don't know is whether they will control the Senate. We won't know that till early January. To the extent that they do, changes are coming fast. To the extent that they don't, then it's going to be more likely to be either a function of the next election in a couple of years, or as Kevin pointed out, it will end at the end of 2025. It'll drop in half. And I think one of the biggest factors respective to this is if the exemption is somewhere around 6 million versus around 11.5 million, it just brings a whole lot more people into the estate tax being an issue for them. So there's just been a lot more people who've got to keep their eye on the ball to assess whether or not they're going to have any kind of a significant estate tax bill as a result of what's going to take place in the next couple of years.
Thanks, Hugh. And David, what do you have to add?
Well, just thinking about capital gains, I understand also that the incoming administration wants to eliminate the deferral of capital gains on like-kind exchanges for real estate. And I know a lot of our clients get involved with that at times of when they're investing outside of their business, they have real estate, and they may, maybe even within the real estate or within the business rather, they may want to swap out. So if they lose that, then that would be another loss from a tax capital gains standpoint.
Thank you to Kevin Gilbreath, Hugh Roberts, and David Weaver for sharing your insight on what is changing in the areas of estate tax. The next episode of the Planning Post-Pandemic and Political Unrest, What's in It for Me series focuses on when should I gift to the next generation? Do you have a question you want to discuss with an expert? Feel free to reach out directly to Kevin, Hugh, or David at the email addresses featured on the screen. Continue listening to the series now or come back later for more. Each topic featured may want you to learn something new.